Four stocks I'm buying during the month of May. Moving forward, I can't wait to talk about these stocks. These are stocks that I feel like are going to do really well over the coming years. I feel like they're going to be great investments. Also, I'm going to go over what stocks we looked at last month, some of the stocks we've been looking at, how well they've performed, especially since the market kind of has ventured back up. We're kind of climbing back into normal territory. That doesn't mean the market might not crash even more so over the coming months. Only time will tell. But no matter what, we're going to be buying great companies at great values. That's what investing is all about. Welcome to the channel. My name is Trey. This is Investing by Numbers. We talk all things stock market and investments, stocks, what stocks might be undervalued, which stocks might be popular but maybe overvalued, stuff like that. If you're into that kind of thing, if you want to learn more about it, please subscribe. Also, please hit the like button. I know you get tired of hearing it, but that helps out channels, especially small channels like us, very much. It helps us out a lot, and I really appreciate it. Thanks for being here. Let's get into stock number one. All right, stock number one, Nvidia. Y'all know me. I love Nvidia. I love the price point right now. We are currently sitting at just around a 39 trailing PE ratio, and this thing up until the past few months, Nvidia stayed above a 50 since like 2019. So being below a 50, especially with the growth rate Nvidia has had, is just a great opportunity to buy. A 50 PE would put us all the way up to somewhere around $149 a share right now. But I'm definitely a buyer under $130 a share. Right now, we're sitting under 115. Right now, this is about my cost base average for all the shares I'm holding in Nvidia. However, some of the shares I've picked up over the past month or so have had great returns on those shares. Obviously, those have averaged out with my other shares, but buying in that correction, we got slightly into crash territory with the S&P and the NASDAQ. So buying Nvidia in the beginning of March, those shares have already made a great return. We'll go over that in a minute after we run through these stocks. But anyways, Nvidia, it's a Mag 7 stock. The great thing about Mag 7 stocks, especially when we go through a correction or a crash, these are the stocks that tend to be, they get bought up the quickest most of the time. Now, it's not a proven science, but a lot of times when we go through a correction or a crash phase, these are the stocks where the dips get bought up pretty quickly because they're the ones everyone's paying attention to. They're the companies that have proven themselves. They are the Mag 7. So I like to invest in my top, one or two Mag 7 stocks. Right now, Nvidia is my top pick, and it rises above all the rest. They've had fantastic growth over the past few years. So let's check out their income statement. I'm on Yahoo Finance right now today. So we had in 2022, almost 27 billion in revenue. Also, we kind of had a break-even year going into 2023. We went from 27 billion just under to barely any increase in revenue. So kind of a break-even year. But then we had over a double up into 2024 with almost 61 billion, and then over another double up into 2025 with almost over 130 billion in total revenue. So great numbers there. Let's see here. Let's look at our EPS. Obviously is also growing at a great rate. We've had more net income growth than we have revenue growth, which is great because that's showing that our net margins are doing really well. Nvidia has fantastic net margins. I don't know how much further they can push that line, but we will see. They have fantastic net margins. They're a cash printing machine, and their growth has been tremendous. And the fact that they're trading at under a 40 PE right now is awesome. The next stock on our list is e.l.f. e.l.f. is a beauty company. e.l.f. has become very, very popular over the past few years. Right now, e.l.f. is experiencing some difficulties moving forward. Obviously, a lot of their products have, part of them are made with Chinese products. So the fact that the tariff situation with China, that's brought on a lot of fear with e.l.f. However, they did get pretty overvalued in the past, and now we're kind of in a leveling out period. But we got all the way up to well above $200 a share. and since we've come pretty far down. This thing is trading around a 39 PE as well, and it's had phenomenal growth the past few years. So the fact that it's trading this cheap is excellent. I've been picking up as quite a bit of shares, as much as I possibly can right now. But let's check out their income statement as well, so you can kind of see the growth rates they've had over the past few years, because they've had, just like Nvidia, some fantastic growth. 2021, 318 million in revenue. We had roughly around a 25% increase year over year in 2022 to 392 million. Then we had almost like somewhere around 50%, probably around 45% year-over-year growth into 2023 with 578 million, and then almost a double up into 2024, as now we've cleared over $1 billion in net revenue. And even with the trailing 12 months, we're up around 30% or so, something like that. Obviously, EPS has done really well as also it's growing at a much faster rate than revenue, which is great. Trailing 12 months, we've had a little bit of a dip. Obviously, some of the numbers have come down lately, but that's all right, because I mean, with this historical past 5 years or so, with this kind of growth, we've still got plenty of growth ahead of us. Although, most people would expect it to start slowing down over the coming years. Still, nonetheless, the fact that we're trading at a 40 trailing PE with the numbers we've seen is fantastic. So great stock here with ELF. The next stock on the list is Adobe. Adobe is a subscription-based company. They offer web design services, video editing, stuff like that, photography editing, Photoshop, Illustrator, all those types of products. Adobe's been around, a long time. It has been used by graphic designers and video editors and stuff like that for many, many years. Their products are amazing. I did use Adobe for a while at a time period where I had a screen printing business, and I used it for all my design, design work, and loved working with Photoshop. Also, they are trading at a 25 PE, and Adobe is just solid as can be. They are a well-oiled machine when it comes to the kind of numbers they're putting up. And the great thing is, look at that. They've been basically have run sideways. I'll come back over here to the price chart, but they've run for the last 5 years. Their prices basically run sideways. So at the point we're sitting at right now, with the last 5 years, we are sitting at hardly any growth in share price. So right now we're poised for a great potential return over the next few years, as we've just been running sideways for quite a few years. And our PE ratio reflects a great price, because we continuously have around 10% revenue growth every year. I mean, this thing could easily be trading at, a 30 to 40 PE. And they, let's see here. So looking back into 2021, we had roughly just under 16 billion in revenue, up to 17.5 in 2022, 19.5 2023, 21.5 in 2024. So you can see, around 10%, is pretty steady revenue growth year over year. So super solid, consistent. A pretty easy call when it comes to investing into Adobe. This one's going to be pretty easy money over the next few years, as they are a subscription-based web company. This type of business model does really well, and they have done really well. They've done great at proving themselves over the past, 2 or 3 decades. So this is an easy call for me. I like Adobe a lot. Very little, in my opinion, downside. Also, although if we see more downside in the overall market, we could get even better prices on Adobe. But that's the third stock I'm buying. All 3 of these I've talked about were stocks I was buying in March this past month. They were all on the list, but I've added one to the list that I've talked about before. And stock number 4 is Gigacloud Technology, GCT. I've talked about this stock before. I made a great video about it. Basically, it's a business-to-business model. They have big companies they buy bulk from overseas, and then they basically sell this as an all-in-one to the consumers of another business. So they basically help facilitate the shipping, the transactions, all that stuff. So basically you can think about it like, let's say you're a company and you go to Gigacloud and they've got all these great products. So you start marketing those products under your own business, and Gigacloud just helps facilitate the transactions and the shipping and all that. So basically they buy in bulk from big companies overseas and help get these products to consumers of other businesses here in the States and whatnot. So down here in price, we see we've been kind of a roller coaster for the past few years. It IPO'd and ran all the way up to just under $50 a share. We got almost to that level in 2024, and it's since been selling off. But they've got great, revenue growth. Right now, our price ratio is under a 5 trailing PE, which is fantastic for a company like Gigacloud. We got as high as just over 11. But, with these newer companies, they carry a lot more risk involved. And so especially with the current economic environment with tariffs and whatnot, it scares a lot of people. But Gigacloud is pushing forward. I read an article from their CEO, and they are moving a lot of stuff around and navigating this environment in a way that will benefit them and their clients and consumers of their business for years to come, which is what I love to see from a company. I want to see one that's bringing solutions to the table. They expect hiccups in the road, and therefore they're ready for certain environments. And Gigacloud is one of those, at least on paper from what I've seen. We'll see if they can execute over the coming years. Now, this is a company that carries more risk with it. So for me, I'm keeping my size of 5% or less of my total portfolio. I do not own any right now, but come Monday morning, I am picking up some shares. I usually buy every Friday, but I wasn't able to, I was too busy to do anything this past Friday. So Monday morning, a few days late, I will be picking up some shares of Gigacloud. And I've been holding off on buying this one, but just kind of seeing that article from their CEO and seeing the confidence there, I feel really good about it, and I think they've got great numbers. Okay, looking back here, 2021 we had $414 million in total revenue. We had about a 20% year-over-year increase to $490 million in 2022, roughly somewhere around a 45 to 50% year-over-year revenue growth, and then also another 50% or more revenue growth into 2024. So we're seeing fantastic numbers. They're a profitable company. We've seen this type of growth, like companies like Nvidia have had this kind of growth, and they trade, well into the 30s, and up until this past few months, those companies stayed at above 50 PEs. Now they're a little more established in Gigacloud, so Gigacloud's going to trade cheaper. There's a little more risk involved, but still, this is some fantastic growth, and trading at, under a 5 trailing PE is fantastic. I'm excited about it to pick up shares. Like I said, this will be a smaller position, but when you're like me and you're constantly investing in the stock market, all my money is tied up in other stocks. So every week when I bring, whatever money I want to invest into the market, I can start building in certain positions slowly over time, and they're automatically going to be a smaller position than my other positions if it's a new company I'm investing in. So if you're rolling over, a whole entire portfolio size into certain stocks, yes, I would keep Gigacloud kind of lower than others because it carries more risk. But if you're kind of like me and you've got all your money tied up into a whole portfolio and you just invest, a little bit every week, you can start building small positions in companies like this. And as the rest of your portfolio grows, you can add to them if you want to. But it's important for these type of companies, if you're investing in them, you want to keep your position size to where you don't carry a lot of risk. If this company, over the next few years just has a major decline, their whole business model starts falling apart, their leadership falls apart, that, if that does happen and the company falls apart, your overall portfolio doesn't take too large of a hit. But if this company continues to execute, do really well, and grow, over the next, couple decades, you could see this company trading way higher. So the amount of possible risk to reward, your reward here could be very large over the coming decades. You know, these are the kind of businesses we look for early on, where we want to see great numbers, we want to see great leadership, and we want to see them navigate through economic hardships. And so when they're able to do that, that's kind of what I like to look for, you know, because I want to see these newer companies that have great growth numbers, great net income growth and revenue growth, and they're managed well. I want to see how they do during these difficult times. And when they're actually doing well and still growing through them, that's a fantastic sign. It doesn't mean you're safe from every risk, but it's a good sign, and that's what gives me the confidence to start investing in companies like Gigacloud. So I'm pretty excited to see how this does over the coming few months. We have no idea what the obviously the macro environment will look like. You know, a lot of people believe that we're kind of starting to move towards a positive light with a tariff situation. We're still having to negotiate things with China, but you know, Trump likes to talk a lot. You know, he's a showman. So a lot of times he moves markets much more so than other presidents. The markets they tend to swing quite a bit with Trump, as he likes to, you know, he's a showman. He likes to talk a lot. So that's kind of what we're looking at. But we could definitely see further downside. He could come out with something tomorrow saying, all right, you know, worldwide tariffs are back on, and we're going to hit it harder than we ever have. And you never know. He could pick a fight with Russia. So you never know what he's going to do. And that's just where, you know, nothing's ever a for sure thing in the stock market, even though it seems that we're starting to kind of recover from this correction in the market / short-term crash we had. And it looks like we're recovering and kind of starting to move up towards back into the all-time highs range. We don't know. So therefore, that's why we always are looking for great companies at great values no matter what. And if we can't find those great values, then that might be the time to sit on the sidelines. Right now, though, still plenty of opportunities out there. So I want to look over our stock picks from last month and how they've kind of been performing over the past month. Obviously, April was a crazy month. The first week in April is when the S&P 500, for a very brief period, entered into bear market territory. It was down over 20%. So we've had a lot of ups and downs with the stock market in the month of April. But guys, it was a fantastic month to be buying stocks. Now, like I said earlier, we could be returning to all-time highs, or we could still reverse and have, you know, an overall larger market crash here. But looking at the S&P 500 here, I'm looking at SPY. Beginning on April 7th, we kind of dropped down. We actually dropped all the way down into the 480s here. Here we had 493, but on that day we dropped down a little further than this. Robinhood's not really recognizing that much of a dip, but we dropped down quite a bit, and then as you can see, we've recovered. Now, even for the whole month, from the beginning of the month, we're up over 4% with the S&P. So we have had, despite those dips, we've seen some gains. So this stuff happens fast, y'all. I mean, when we see these corrections, especially with this past one we had, things can turn around fast, okay? So at the beginning of obviously the beginning of April, Nvidia was on my list, and we saw it immediately crash April 4th and April 7th. It was because it was a Monday morning when I actually invested more money than usual. I was waiting for the S&P 500 to hit bear market territory. And when it did, I took my extra cash, which was about $4,600, and I invested it between my three stocks at the time, which were Nvidia, Adobe, and ELF. And so you know I'm not just making stuff up. I can show you down here. And this is really this isn't to brag, because things can turn around fast, guys. This is not bragging. This is just showing you that when these situations happen, it's a great time to be buying. All right, April 7th, I picked up 17 shares, roughly $1,500 at $88 a share, just over $88 a share. And now we're at 114. So fantastic growth for that, quick amount of time, basically just a month, Adobe. We picked up some Adobe shares as well on the same exact day. Looking at the 1 month chart, we can look at Adobe as well. And yeah, same kind of thing. You know, we took a major crash that first week as the market crashed, and it's since come back up, and we're up almost 3% on the month, even though we had this huge drop, but we've been recovering fairly quickly. Coming down here to my history, yeah, April 7th. Just over 1,500. I bought 4.65 shares at $337 a share, and now we're up to over 380. So another great turnaround very quickly with Adobe. ELF. Let's check out ELF. ELF is, I mean, a lot of stocks you'll see have been on the same roller coaster ride as all of these. You know, they dipped really hard in the beginning of April, and they've since started to recover. ELF is doing great. I mean, for the month, we're up, almost 19% on the month. So my position in ELF is doing pretty good. I'm up, 10% overall, but I didn't start buying this thing until show more. It was somewhere. I mean, I hadn't been picking it up long. February. I started picking up small amounts back in February. So in just over 2 months, 10% overall, but not bad at all for 2 months. A 10% return is pretty nice. Looking at what I picked up on April 7th, obviously I picked up 30 shares at just over $50 a share, and now we're at 68. So fantastic growth there with ELF. And I just think it's important. I mean, overall between those three, it was about $4,600, and I've roughly have made somewhere between those shares I bought on April 7th when we had that crash, around $1,000 altogether. So around a 25% return on my money just in over a month. Just on the stocks I bought with that extra money I had. Normally that money would have gone to, stuff I'm doing around the house. We were saving up to possibly want to get a new car this year. So that money was going to be going towards that. But once we hit that 20% mark, I said that stuff can wait. 20% crashes don't happen that often, even though we have seen 3 in the past 5 years, which is pretty insane. So I went ahead and put that $4,600 into stocks. I normally wouldn't have. Normally I'd just be putting my normal amount, but it was all extra, and that money has returned 25% over the last month, which is phenomenal. But that's why we do it, guys. That's why we play the game smart. We try to keep our risk low, and during this time period going through this correction and that short-term crash, that's why I've only had 3 stocks I've been buying. I've been focusing on 3 because when the market's at all-time highs, the deals aren't quite as good. So a lot of times I know it sounds crazy, but I'll be buying, I might have 5 or 6 on the list that all are just, should be doing pretty well. But when we have those crashes, that's when I like to focus in on just a few that I think will give the best and quickest returns over the coming months. But now that we're getting back into normal territory, if we over the next month do venture back up near all-time highs, things start to change. I still will probably keep these stocks on my list, but I might start adding some different ones to the list, because the overall environment when it comes to investing, for me, it changes a little bit. If we're in a crash, I focus on some of the safest stocks overall, and we're not in a crash is when I venture out a little bit, and I might be investing, between like 5 different stocks or something like that are all in a fair value territory, but maybe not in like tremendous, awesome deal territory like we've seen in the past month. Guys, that's it for me. I appreciate y'all tuning in. Hopefully you got some good information out of this. Like and subscribe to the channel. Keep up with us. If you have any questions, comment below. Tell me what stocks you're buying this month. If you're buying any of these that we've talked about, let me know. I've got some good videos I'm tagging around here. Check those out. I've got some price targets on Nvidia and ELF, and also I've got another video I did on Gigacloud. So thanks for tuning in. I will catch you on the next video. Have a great day.